Moving averages, known for their simplicity and their scary predictiveness of the markets. Even by themselves, moving averages are pretty decent. But what if I told you that there is a new indicator that is at least 3 times better than the classical moving averages? In this video, I'm going to show you exactly what that indicator is and how it works. Let's get into it. Now, there are different types of moving averages out there, and the most common one is the classical exponential moving average, or EMA. Now, I'm sure a lot of you guys are familiar with the workings of the classical EMA. It helps us identify trends in the market by being below or above the price. When the price breaks and closes above the EMA, it indicates the beginning of a bullish trend and therefore an opportunity to take a long trade. Conversely, when the price breaks and closes below the EMA, it indicates the beginning of a bearish trend and therefore an opportunity to take a short trade. Now, based on these two setups, you may be thinking,
well, I don't see any problem with that strategy. Those 2 trades were super profitable.
Well, the common problem with this strategy is that it always produces late signals. This is because the classical EMA is a lagging indicator. And I mean, it's super laggy. The biggest problem with entering trades late is that you might end up missing out on the entire move because trends don't last forever. So the earlier the entry, the better. So let's say you have a market structure strategy. You saw this structure where the support level turned into a resistance level. So you decided to draw a horizontal rectangle right here. Then once the price pulled back and rejected off of this key level, you entered a short trade as soon as it broke and closed below this EMA. You set your stop loss at this swing high, and for your take profit, you targeted the next key level, which is this one right here. Looking at this trade, you would have had a risk-to-reward ratio of 1 to 1.46, which is definitely not the best. Now, let's see what would have happened if we took the same setup using the same strategy, but only this time, we're going to be using the new version of the EMA indicator, this one right here. This is where the price broke and closed below the new EMA. If we entered a short trade here and put the stop loss at the exact point as the previous setup and targeted the same take profit level, you'll notice that this trade ended up having a risk-to-reward ratio of 1 to 4.53, which is 3 times higher than what the old EMA was giving us. The reason for this is because this new indicator gave us an early entry signal while the classical EMA produced a super late signal, which resulted in us missing out on all this move, 27 pips to be exact. The difference between the old EMA and this new EMA indicator is the amount of lag. The old EMA lags a lot, leading to a lot of missed opportunities in the market. With this new version of the EMA I'm going to show you, the lag has been significantly reduced. Now, you may be asking yourself, but what is the name of this new tool and where can I find it? Well, ladies and gentlemen, the new indicator is called Zero Lag Exponential Moving Average, and you can find it on TradingView. To use it, go to TradingView, click on Indicators, and type here Zero Lag. Then select this one that's called Zero Lag EMA V2 by Kevin. Actually, click on it 3 times because we're going to need 3 of them. And then we're going to change some settings. For the first one, click here. On the Inputs tab, change the length to 20. Then on the Style tab, you're going to change the plot color to green. For the second one, you're going to change the period to 40. And on the Style tab, change the plot color to red. For the third one, you're going to change the period to 60. On the Style tab, change the plot color to blue. Now, looking at this setup, you'll notice that it's very similar to another indicator called the Williams Alligator, which I did a video about a few weeks ago. We're going to be using the ZEMA or the ZEMA. Well, I'm just going to be calling it the ZEMA. We're going to be using them to identify trends in the market as well as for identifying buy and sell entry signals. For a bullish trend, the ZEMAs should be aligned in such a way that the blue one is at the bottom, the red one in the center, and the green one at the top. For a bearish trend, the blue one should be at the top, the red one remains in the center, and the green one should be at the bottom. So how do we trade using this strategy? Well, I'll tell you, just after introducing the sponsor of this video, hankotrade. If you're looking for a broker with some of the lowest commissions and spreads in the market, then check out hankotrade. I use them on a daily basis. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that it's a live account. For those of you that love high leverage, hankotrade offers up to 500x leverage, which basically means that my $1,000 deposit could have the buying power of $500,000, which is really insane. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so you'll have $1,000 to trade with. To get access to the bonus, as well as all the other perks, sign up to hankotrade using the link in the description of this video. Now, back to the video. So to take a long trade, first we want to make sure that these lines are spread further apart like this, with the blue one at the bottom, the red one in the center, and the green one at the top. This basically indicates a strong bullish trend. Next, we want to wait for the price to pull back and touch this red line without touching this blue line. For the pullback to be valid, there should be at least one candle that opens and closes below this green line. In this particular example, you can see that we had several candles that opened and closed below the green line. After the pullback, we want a candle to close above the green line, and then we're going to enter a long trade on the open of the very next candle. All our entry conditions are met on this candle, so we're going to enter a long trade. The stop loss is going to go below the most recent swing low, and for the take profit, we're going to set it at 2.5 times the risk. We let the trade run, and it hits take profit. Now, here's one more long example. As we can see here, the three ZEMA indicators were aligned to a bullish trend. Then the price pulled back and touched the red line without touching the blue line. During the pullback, we also see that there was at least one candle that opened and closed below the green line. After the pullback, this candle broke and closed above the green line, so it becomes our entry candle. For short trades, we're just going to reverse all the conditions. First, we want to make sure that these lines are spread further apart like this, with the blue one at the top, the red one in the center, and the green one at the bottom. This indicates a strong bearish trend. Next, we want to wait for the price to pull back and touch this red line without touching this blue line. For the pullback to be valid, there should be at least one candle that opens and closes above this green line. After the pullback, we want a candle to close below the green line, and then we're going to enter a short trade on the open of the very next candle. All our entry conditions are met on this candle, so we're going to enter a short trade. The stop loss is going to go above the most recent swing high, and for the take profit, we're going to set it at 2.5 times the risk. We let the trade run and take profit. As you can see, this is a simple yet powerful indicator that can be used on any trading security. And to answer your questions, yes, the strategy can be used on any time frame. The strategy shown in this video is just one of the many strategies that you can do using the zero lag EMA. If you're planning on using this strategy, remember to do extensive backtesting and forward testing and customize it to your liking so you can have as much confidence as possible when trading with it. That's been it for this video. Hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching, and I'll see you guys next time.